Hi guys, this is Dr. Sadashivam once again with you. My dear friends, today we have seen that Fed have increased the interest rates by approximately 50 basis points, and this is nothing new. We have been discussing it for quite some time, and in my yesterday's video also I had shared with you that this 50 basis points is not a new thing. We have all been talking about it. It's been coming in newspapers, televisions. That is not what is important. But what is important is this is going to make the way for the next 3 4 5 quarters, how they all will pan out, and it's a very historical event, and there could be another one in the month of February which will involve approximately 25 basis increase, and maybe in March another 50 basis points. Guys, one thing is very clear: economy is slowing down throughout the world. We all know that, and Fed has also sent a very strong message that in spite of growth slowing down, they will continue increasing the interest rates. And today you have a restrictive monetary conditions, you have quantitative tightening, and the market is taking it very seriously, and they are talking of terminal rates of approximately 5.1%. What Fed says is they don't worry even if the growth slows down, but in their scheme of things, inflation is the monster that needs to be tackled first. Now about recession, 100%. I'm talking about the economist in the stand chart. He says 100% recession will be there in the year 2023. You see today any interest sensitive sector, be it techs, look at the kind of headwinds that the tech sector is facing in the United States. There's a big tug of war that is going, dilemma in terms of whether to control the inflation, to promote growth, various schools of thoughts. Not just that, look at China. The economic situation is very bad. Look at their consumption numbers, your index of industrial production, all those numbers are extremely damaging, right? Very tepid numbers. It's true that the lockdowns are getting open, but the effect of that, it will take a very long time. If you look at the last 3 or 4 months, things have been very desperate as far as China is concerned, whether it's home buying, consumer sentiments, because the real estate, because these are fair indicators of economic growth, right? But of course, especially after the Chinese New Year, government is doing something, not that it's sleeping. Today also there's a meeting, but improvement, it takes time, right? We really don't know. 1 quarter, 2 quarter, 3 quarters, we don't know. And along with that, from a financial point of view, we used to have monetary stimulus during COVID, but today we can't do that because none of the governments, I'm talking about the whole world, they don't have so much of revenues to fund this stimulus. So once again, they will get into monetization, printing notes, and once again inflation, etc. And Stand chart guy is talking about 8 potential surprises, and he talks about crude oil coming down to $40. Because when there is recession throughout the world, your industrial production will come down, the factories will slow down, whether it's US, Euro, US. Recession is already seen everywhere. Not just that, we are talking of inflation. People are saying there could be a deflation because once this Russia-Ukraine crisis gets sorted out, now food supplies, there will be oversupply of food, which will lead to collapse of food prices. More oil being pumped out and your crude oil will come down. Your euro to US dollar might go to 1.5. Another very shocking was, he was saying Nasdaq could fall by 50%. He says it's a surprise. There is a possibility, right? And we are seeing that effect in India also. Today you've seen how the stock market has fallen down. We were at 18,650. Today it's reached 18,400. Right in the morning, 18,600 PE NIFTY option, which was available for 30 rupees. It went up to 180 rupees in the evening. If anybody had purchased 1000 shares for 33 rupees by investing 33,000 rupees, in the evening he would have got up from his table with 2 lakh rupees. I'm talking about one day, 6 times in one day. US sneezes and we are catching cold. Did these companies have any issue in their balance sheet, any change in their balance sheet? But look at what the pricing, look at the price. There is a new trend that is coming, which is macro investing, because companies analysis, your profits, your revenue guidance, all that will continue. That is not important. But what's happening at the global level, at a geopolitical level, your China lockdowns opening up, US Fed rates increasing, that will be a major factor in terms of where to invest, what to invest, at what price to get in, at what price to come out. Mutual funds are working on that, guys, which is given rise to a new trend called as macro investing. But since time immemorial, these factors are considered, but now it's a separate theme by itself, and that's the kind of importance it has assumed in the last, few years. That's what it is, and I hope you like this video. I've given the description right below this, the link to my YouTube channel, my link to my Instagram, where it is Dr. Sadashivam's Academy, and we share a lot of such information, be it with respect to the stocks and share market, shop floor trainings, leadership trainings, even current affairs, because current affairs are extremely important from a stock market investment point of view. So keeping that in mind, and corporate training, I'm basically a corporate trainer, and any training related videos, be it the leadership trainings and host of other things. So subscribe to this Dr. Sadashivam's Academy. Watch those videos. Do give your comments in terms of where we need to improve. If you have any specific topic in mind which we would like us to come up with, I will put my team to work and we will do those topics also. Okay, guys, this is Dr. Sadashivam signing off till we meet again. Bye bye. Jai Hind.